Welcome to my finance channel. This video might be long, but if you stay until the end, you may finally understand the true nature of markets, speculation, and the cost of mastering them. How could a man who understood the market better than anyone still lose everything multiple times? How could the same strategy create both extreme wealth and total destruction? Chapter 1. The birth of a speculator and the escape from poverty. The deepest obsessions are often born in the cold shadows of absolute deprivation. In the year 1877, Jesse Livermore was born into the harsh reality of a destitute, farming family in Massachusetts. His father expected him to endure a life of grueling agricultural labor under the unforgiving sun. The boy was destined to inherit nothing but exhaustion and poverty, trapped in a generational cycle that crushed ambition before it could even begin to sprout. However, the young boy possessed a mind that refused to accept the mundane cruelty of his circumstances. He viewed the barren fields not as his permanent reality, but as a prison he simply had to escape. At the tender age of 14, armed with a mere $5 secretly given by his mother, he walked away from the farm forever without looking back. He arrived in Boston possessing absolutely no financial pedigree or formal education. He managed to secure a menial position as a board boy inside a noisy local brokerage firm. His daily duty was incredibly monotonous, requiring him to continuously erase and rewrite fluctuating stock prices on a massive chalkboard. For most teenagers, this would be mindless drudgery without any meaningful insight. Yet, Livermore was not operating like an ordinary child. He did not merely see random chalk marks on a dusty board. He saw a fascinating mathematical language slowly revealing itself. He began to notice hidden rhythms and repetitive sequences hidden deep within the endlessly flowing numbers. He secretly recorded these price movements in a small private notebook during his brief rest periods. He discovered that markets operated with a bizarre psychological predictability. Long before he understood the complex macroeconomic forces driving corporate valuations, he grasped that human greed and fear produced identical price behaviors over and over again. The tape whispered a silent truth that the academic elites completely ignored. It revealed that collective human emotion was the true engine of financial fluctuation. Driven by this unprecedented realization, he placed his very first speculative trade in a local bucket shop. He carefully risked his small capital on the stock of a railroad company named Burlington. The trade was executed purely on his formative pattern recognition skills. Within hours, he realized a profit of just over $3, marking the official birth of the greatest speculator. That initial handful of dollars fundamentally altered the trajectory of his entire existence. He instantly recognized that the financial market was the ultimate equalizer. It did not care about his impoverished background, his age, or his lack of Ivy League credentials. The market only demanded absolute objectivity and the courage to act without hesitation when the mathematical probability firmly aligned with reality. Within a single week, the teenage prodigy extracted $200 from the local speculative establishments. He swiftly accumulated enough wealth to repay his mother and fully erase her desperate financial burdens. The dusty farm boy had transformed into a lethal market participant by simply listening to the numbers instead of the noise. The journey from deprivation to infinite possibility had officially begun. The greatest tragedies in finance always begin with the intoxicating illusion of early and effortless victory. Arrogance is often the clever disguise of imminent destruction, arriving exactly when we believe we have mastered The complex mechanisms of the world. Chapter 2. The bucket shops and the illusion of easy mastery. During the late 19th century, authentic stock markets were sacred halls inaccessible to ordinary citizens. Instead, the filthy streets were littered with bucket shops, functioning more like smoke-filled casinos than genuine financial institutions. In these noisy establishments, traders did not actually buy real corporate shares. They merely gambled against the corrupt house on the short-term fluctuations of abstract stock prices. The young Jesse Livermore thrived in this chaotic environment, using his worn notebook of price patterns as a lethal secret weapon. He did not need to understand complex macroeconomics or analyze deep corporate fundamentals. He simply stared at the endlessly ticking ticker tape, identifying the microscopic psychological rhythms hidden deep within number sequences. His terrifying win rate quickly sparked extreme panic among the greedy bucket shop owners. In this rigged system, a lucrative customer profit meant a direct and painful financial loss for the shadowy house. When a teenage boy began consistently draining hundreds of dollars from their vaults, the corrupt establishments united to ban the boy genius permanently. To continue his addictive trading game, he was forced to adopt various extreme disguises. He wore elaborate fake beards and spoke with altered accents, slipping like a silent ghost into remote shops. This thrilling game of cat and mouse dangerously inflated his deep internal confidence. During this formative period, he successfully accumulated over $10,000. For a destitute farm boy, this represented an unfathomable fortune, instantly paralyzing his acute awareness of any genuine potential risk. Looking at the thick stacks of cash, he felt a profound intellectual superiority hovering far above ordinary men. This easy early victory actually planted the fatal seeds for his future devastating collapses. In the artificial greenhouse of the bucket shop, trades were executed instantly without the brutal liquidity slippage or execution delays of real markets. He drowned in a false illusion of absolute control and perfect market synchronization. He falsely equated a simple numbers game with the ruthless bloodshed of authentic capital markets. The deep-rooted greed within human nature was infinitely magnified by this easily acquired paper wealth. He blindly believed that his sharp intuition could conquer any financial battlefield. The immense complexity of real institutional trading remained completely invisible to his untrained eyes. The arrogant teenager finally boarded the heavy steel train to New York City, carrying $10,000 and an unbreakable ego. He had absolutely no idea what terrifying financial slaughter awaited him inside the brutal corridors of Wall Street. We frequently mistake temporary luck for absolute skill, until the authentic world violently tears that beautiful illusion completely apart. Chapter 4. The Discovery of Trent and the First System Upgrade. After experiencing complete humiliation and total ruin in New York, Jesse Livermore retreated to reflect upon his fatal miscalculations. He realized that chasing minor intraday fluctuations was a guaranteed strategy for utter destruction. The market was not a casino operating on rapid noise, but a massive ocean governed by deep underlying currents. He had to stop fighting the violent surface waves and learn to understand the deep tides. He discovered that attempting to outsmart the immediate tape was entirely impossible for an independent trader facing institutional spread and severe slippage. The true secret to immense wealth was not found in predicting the hourly swings, but in identifying the broader macroeconomic trend. He profoundly understood that the big money was never made in the rapid buying and selling, but always made in the patient waiting and holding. This epiphany represented the first major structural upgrade to his entire speculative philosophy. He shifted his intense focus away from the frenzied noise of daily price ticks toward the silent economic conditions shaping global industry. By studying general market trajectories, he evolved from a mere street gambler into a genuine strategic speculator. He was slowly building a robust mental framework capable of withstanding deep and terrifying financial chaos. However, knowing the theory of the trend and possessing the psychological fortitude to actually execute it are two entirely different realities. Human nature constantly begs the trader to secure small profits immediately or hold desperately onto massive losses out of blind hope. Livermore had to systematically reprogram his own biological instincts to ensure he only engaged when the general market trajectory perfectly aligned with his individual capital positioning. The ultimate financial revelation is realizing that you can never beat the market. You can only quietly ride its unstoppable momentum. The most difficult skill in speculation is not the brilliant calculation of the future, but the silent endurance of the present. Chapter 5: The Power of Patience and the Birth of True Discipline. Jesse Livermore now understood the magnificent power of the macroeconomic trend. However, he quickly encountered an entirely new and terrifying psychological obstacle. Identifying the correct market direction is intellectually satisfying, but executing the trade demands absolute emotional restraint. The human brain is biologically wired to seek immediate gratification and constant action. Sitting motionless inside a frenzied brokerage office while millions of dollars constantly change hands required superhuman psychological discipline. Every single day, the ticker tape continuously whispered seductive promises of quick profits. The novice speculator always feels an intense internal compulsion to participate in every minor fluctuation. They fear missing the action, driven by a destructive combination of greed and insecurity. Livermore realized that frequent trading was simply another form of emotional addiction. To master the market, he first had to violently conquer his own restless biological impulses. He famously concluded that it was never his thinking that made the massive fortunes. It was always his sitting that generated the unprecedented wealth. He began to view the market not as a daily casino, but as a slow, moving continental shift. He would establish a massive position aligned with the fundamental economic reality. Then, he would force himself to ignore the terrifying intraday volatility and simply wait. Holding a winning position is often significantly more painful than enduring a losing trade. When substantial paper profits accumulate, the mind screams at the trader to liquidate and secure the capital. The terrifying fear of watching a massive gain magically evaporate constantly haunts the psyche. Livermore developed an iron will, refusing to sell until the underlying macroeconomic conditions fundamentally reversed. He let his profits run into uncharted financial territories. Simultaneously, he perfected a brutal and unforgiving system of risk management. He understood that perfection is an illusion and that every speculator will inevitably suffer significant miscalculations. The key was never allowing a minor error to evolve into an existential catastrophe. He implemented strict predefined stop losses, cutting his failures immediately without any emotional attachment or hopeless prayer. Capital preservation became his ultimate and most sacred religious doctrine. True mastery requires the humility to accept small defeats instantly and the arrogance to let massive victories run forever. The ultimate master does not strike when the iron is hot, but waits patiently until the fashioned reaches its absolute maximum temperature. Chapter 6. The Art of Timing and the Strategy of Waiting. In the relentless grind of heavy industry, premature action often destroys a perfectly engineered system. Jesse Livermore eventually learned this same brutal lesson within the ethereal realm of global finance. He realized that identifying a major economic shift was entirely useless if the speculator executed the heavy trade too early. Capital exhaustion frequently occurs long before the correct macroeconomic vision finally materializes into tangible profitability. Imagine managing a massive cold storage production facility, facing severe raw material shortages. If you aggressively accumulate stainless steel inventory months before the actual price surge, the holding costs and locked capital will inevitably crush your daily operations. Livermore recognized that being too early in the financial market operates exactly like holding stagnant industrial inventory. Timing the exact moment of execution is the absolute essence of survival. To perfect this dangerous art of execution, he developed the crucial concept of the pivotal point. He would patiently monitor the fluctuating numbers like an experienced factory floor manager watching for a specific pressure valve to release. He refused to commit his valuable capital until the market price aggressively broke. Through these critical mathematical thresholds, confirming that the underlying momentum possessed genuine structural power and authenticity. When the pivotal point was finally breached, he did not hesitate or question the invisible mechanics of the market. He would instantly deploy his heavy financial machinery with absolute conviction, much like engaging a massive industrial assembly line, once the exact specifications are met. This methodical approach minimized his immediate financial exposure while maximizing the inherent probability of capturing the most violent and profitable price movements. Many intelligent traders accurately predict the impending collapse of overvalued markets, yet they frequently bankrupt themselves trying to short the unstoppable euphoria. They mistake their accurate fundamental research for immediate executable reality. Livermore understood that the collective insanity of a speculative bubble always outlasts the rational solvency of the premature bear. He simply waited in the quiet shadows until the great financial machinery actually began to severely malfunction. True precision requires the silent endurance to watch others briefly prosper while you patiently wait for the inevitable structural collapse. The absolute pinnacle of financial power is reached when the market itself begs you for mercy. Chapter 7. The Great Bear Trades and Market Manipulation. In the year 1907, the American financial system experienced a terrifying contraction of liquidity. As banks began to collapse and desperate investors rushed to liquidate their holdings, Jesse Livermore saw the perfect convergence of his master strategy. The macroeconomic trend was undeniably pointing downward, and the critical pivotal points across major equities were violently breached. He unleashed a massive barrage of heavy short positions. He was no longer a mere participant surfing the waves. He had become a destructive force of nature accelerating the collapse. As stock prices plummeted into the abyss, his personal wealth exploded exponentially into the millions. The entire Wall Street establishment was bleeding out, continuously, paralyzed by extreme fear and utter incompetence. In the midst of this complete chaos, Livermore remained an oasis of cold, calculating mathematical precision. The devastation became so severe that the very survival of the American economy was genuinely threatened. The legendary financier John Pierpont Morgan was forced to personally intervene to rescue the crumbling banking infrastructure. Recognizing the unstoppable downward pressure created by the Great Bear, Morgan directly sent desperate emissaries to Livermore. The most powerful financial institution in the world was officially pleading with a former farm boy to cease trading. Understanding that a completely destroyed market offers no future opportunities for profit, he gracefully agreed to cover his massive short positions. He injected immense buying power back into the dying market, instantly triggering a violent rebound that saved Wall Street from absolute annihilation. Overnight, he was transformed from a secretive speculator into an immortal financial deity. The public press crowned him the undisputed king of the stock exchange. He repeated this godlike feat years later by orchestrating a spectacular short campaign in the global cotton market. By masterfully manipulating public perception and quietly executing massive orders, he forced commodity prices to collapse exactly according to his grand design. He learned that true financial dominance allows a man to dictate the psychological reality of millions. He was no longer reading the ticker tape. He was actively writing it. When a single mortal man accumulates the power to destroy an entire economy, he simultaneously invites the unforgiving vengeance of the gods. The greatest illusions of permanent prosperity are always shattered by the cold mathematics of reality. Chapter 8. The Peak, the 1929 Crash and Absolute Mastery. By the late 1920s, the American economy had entered a state of absolute speculative delirium. Ordinary citizens blindly believed that the endless upward trajectory of paper wealth was a permanent law. As a manufacturer building physical infrastructure, I understand that infinite expansion without systemic cooling violates basic industrial principles. Livermore watched this massive overheating with the cold precision of a factory engineer monitoring a dangerously pressurized boiler. While the entire nation blindly accumulated highly leveraged equity positions, he quietly prepared for the inevitable structural collapse. He methodically constructed a massive network of over 100 independent secret brokers. Much like assembling a complex refrigeration system across multiple hidden facilities, he systematically deployed heavy short positions. He recognized that the general market trajectory was fatally disconnected from genuine economic production and tangible industrial output. In late October 1929, the artificial facade of the American stock market violently disintegrated. During the terrifying events of Black Tuesday, the trading floors erupted into utter pandemonium. Frantic investors screamed in pure agony as their generational fortunes evaporated instantly within the chaotic blizzard of unending sell orders. The market liquidity utterly froze, resembling a catastrophic mechanical failure inside a massive industrial compressor. High above the bloody streets of Manhattan, inside a silent penthouse office, Livermore stood completely unbothered by the surrounding carnage. While terrified bankers perished and desperate crowds gathered outside the exchange, he methodically issued telegraph commands with absolute emotional restraint. While the entire Western industrial machine ground to a devastating halt, he flawlessly extracted over $100 million from the burning financial wreckage. However, the absolute mastery of market mechanics frequently creates a terrifying disconnect from ordinary human reality. When the king of speculation finally returned home following the cataclysmic crash, he discovered his own family hysterically packing their belongings. They assumed the destruction of the macroeconomic system guaranteed their imminent poverty. They wept for their survival, unaware that he now possessed more capital than many sovereign nations. Absolute financial omniscience is a supremely lonely mountain that isolates the master from the very humanity he profits from. The heaviest burden a mortal can carry is the unbearable weight of absolute and unchallenged victory. Chapter 9: The Decline, Ego, Regulation, and Structural Change. Following the cataclysmic crash of 1929, Jesse Livermore reached the absolute pinnacle of financial supremacy. He possessed wealth exceeding $100 million, functioning almost like an independent central bank. However, this unprecedented accumulation of capital slowly poisoned his psychological foundation. He inadvertently replaced his sacred market humility with a dangerous and overwhelming sense of personal omnipotence. While he basked in immense prosperity, the surrounding world plunged into the dark abyss of the Great Depression. Millions of desperate citizens lost their lifelong savings, demanding a public scapegoat for their unimaginable financial suffering. The American government responded by drastically altering the fundamental architecture of Wall Street. They established strict regulatory bodies designed to permanently eradicate the wild speculative West. The creation of the Securities and Exchange Commission fundamentally changed the mathematical probability of his traditional strategies. The shadowy tactics of market manipulation, hidden insider networks, and unrestricted leverage were suddenly outlawed. The chaotic ecosystem that birthed his financial genius was systematically dismantled by federal law. He was an apex predator, suddenly trapped inside a highly regulated and sanitized zoo. Adapting to this strict new paradigm required a complete destruction of his ego, a task he found psychologically impossible. Instead of acknowledging the structural shift, he arrogantly attempted to force the modern market to obey his outdated commands. He began violating his own ironclad rules of risk management. The cold objectivity that once defined his execution slowly mutated into desperate hope. This professional deterioration was severely compounded by continuous devastation within his personal existence. Multiple bitter divorces, public scandals, and family tragedies violently fractured his already fragile mental state. The silent concentration required for deep macroeconomic analysis was replaced by unending emotional turmoil. The once invincible king of speculation was slowly reduced to a haunted man chasing the fading ghosts of yesterday. The ultimate tragedy of the speculator is not losing capital, but tragically outliving the specific era that perfectly matched his unique genius. The most terrifying enemy a man can ever face is the one staring back from the mirror. Chapter 10: The Final Collapse and the Tragedy of Self. Jesse Livermore conquered every conceivable financial market, yet he utterly failed to conquer the dark abyss of his own human nature. The stricter regulations of the new era stripped away his traditional edges, leaving him dangerously exposed to the relentless grind of modern trading. His once invincible discipline crumbled under the crushing weight of severe depression, alcoholism, and endlessly complicated family tragedies that constantly plagued his waning years. Deprived of his absolute market dominance, he began executing desperate and illogical trades, violating every single sacred rule he had painstakingly authored. The incredible patience that once generated millions mutated into a frantic need to prove his lingering relevancy. He aggressively chased mediocre opportunities, utilizing excessive leverage in a futile attempt to reclaim his fading crown. The master speculator had tragically regressed into an ordinary, fearful gambler. By the late 1930s, the colossal fortune extracted from the Great Crash had completely evaporated into thin air. He declared bankruptcy for the final time, but unlike his formative years, he possessed neither the youth nor the fierce psychological resilience to rebuild. The cold financial markets show absolutely no mercy to past legends. They only reward the flawless execution of present mathematical realities and unwavering objective discipline. On a cold November afternoon in 1940, the greatest speculator in Wall Street history walked silently into a Manhattan hotel cloakroom. He sat alone in the dim space, produced a steel revolver, and willingly pulled the trigger, ending his tumultuous existence. He left behind a tragic suicide note describing his life as an absolute failure, utterly unable to separate his intrinsic human worth from his net worth. The profound tragedy of Livermore is not that he lost his immense wealth, but that the very mechanics enabling his dominance eventually guaranteed his destruction. To truly master the market, he had to completely detach from ordinary emotion. However, living a meaningful existence requires deep human connection and vulnerability. He built a flawless financial algorithm, but entirely neglected to build a sustainable psychological anchor to keep him grounded. We spend our entire lives trying to predict the unpredictable future of the external world, forgetting that the most dangerous variables reside exclusively within our own minds. The financial market is merely a flawless mirror reflecting our deepest insecurities, endless greed, and ultimate fragility. If this deep exploration into the philosophy of speculation has brought you value, please like this video and subscribe to my finance channel. True wealth is never measured by capital extracted from the market, but by the internal peace preserved despite the chaos. Will you conquer your inner demons before attempting to conquer the world?